to Accountancy Learning AAT Sample Paper Debriefs. I'm Sarah, and in this video I'll take you through the Introduction to Bookkeeping Sample Paper 1 Task 2. Task 2 is about principles of double entry bookkeeping. And for Part A, we are asked to identify the classification of each account. And the options that we've got in our drop down are here on the right hand side: asset, income, liability or expense. And our first account is plant and machinery. So plant and machinery, this is often like machinery that we use in factories, so it's big kind of expense machinery. So this is going to be an asset to the business. It is something owned by the business. Wages and salaries, so this is what we pay our staff. So this is what a cost to the business of running the business. Without our staff, we wouldn't be able to run the business. So wages and salary would be an expense. A loan from the bank. So when we've got a loan, it means the bank has lent us some money that we are going to have to pay back. So therefore we have a liability to the bank to pay back the money that we've borrowed. And commission received. So this is a form of commission that we've received from somebody else or from another business. So therefore it's a form of income. Then we're told the asset accounts total 159,772 and the capital account shows a balance of 100,652. Part B asks us to calculate the amount of liabilities, and we're told do not use a minus sign or brackets. So we've got assets amount and we've got a capital amount. Now we need to use the accounting equation for this. So our accounting equation is assets minus liabilities equals capital. So now let's put the figures in that we know. So our assets figure is 159,772. We haven't got our liabilities figure, but we have got our capital figure. So now we can move the equation around. So remember when we change sides, so going back to what we might remember from our maths when we were at school, going back, changing sides of a formula will change the sign. So we're going to move our liabilities to the right and our capital to the left. So we'll leave the assets where it is, and then we're going to switch over our capital and our liabilities and the sign will change. So currently the capital is a positive, so that will become a negative, and our liabilities is a negative, so it will become a positive on the opposite side of the equal sign. And now we can do the sum to find out our liabilities, and we end up with 59,120. So always break this down, write it all out. You can ask for paper in the exam to write your notes on. Write it all out, substitute the numbers that you know, and then move your formula around to find out the missing item. The transactions below have been entered into the bookkeeping system. Part C asks us to identify the dual effect on each transaction by dragging the appropriate description into the table below. You should ignore VAT. So we've got a lot of choices at the bottom here, and you can drag them in your exam. So we've got purchased a motor vehicle on credit. So if we think about our double entry here for this one, we are going to debit our motor vehicle account and credit our payables ledger control account because we've bought it on credit. So what type of accounts are these? We've got an asset account and a liability account, and they're both going to increase because we have got an increase in our motor vehicles and an increase in our credit with our supplier. So it's going to be increase asset and liability. The second one is repaid a loan in cash. So our double entry there is if we've used cash, we're going to be crediting a bank account or some form of cash account, and we will be debiting a loan account. So our loan account is a liability and our bank cash account is an asset. So because we're paying back the loan, we're reducing the liability, and because we've paid in cash, whether it be from the bank or a cash account, that's an asset account, so we're also going to reduce the asset as well. So it's going to be a decrease in asset and liability. Next, we've got sold surplus office equipment for cash. So double entry for that. So the cash is going to increase and our office equipment is decreasing. Our cash is an asset account and our office equipment is an asset account. So we are going to be increasing our asset, and we're also going to be decreasing an asset as well. So it's going to be increase and decrease an asset account. Received a bank deposit from the owner. So because we've got money from the owner, that's going to be capital. And it's gone into the bank. So we've got, that's our asset account and a capital account. So we've increased the bank, we've got more money in the bank, and the owner has increased their capital as well. So it's increase asset and capital. And then our final one here for this task is paid a credit supplier using a bank overdraft. So we need to look at this one carefully. So we've paid a credit supplier. So it means that our debit is going to be for our payables ledger control account, because we're now reducing the amount we owe that supplier. So that's liability reducing. And our credit is our bank, but we're using an overdraft. So this is also going to then be a liability to the business. So we are then going to increase and decrease a liability. So with these ones, think about what your double entry is, then think about what type of account it is and decide what is increasing and what is decreasing. That's the end of task 2.